This could end up being the biggest bubble of all time. A few months ago, I made a video about how Nvidia had turned into a juggernaut thanks to its dominant position in the AI ecosystem. As the largest supplier of GPUs, or chips that are used to create and power AI applications like ChatGPT, Nvidia is raking in insane amounts of money. That was in March, and Nvidia was trading at around $95 per share with a market value of around $2.4 trillion. It had already doubled since the start of 2024 and risen sevenfold compared to where it was at the start of 2023. Today it's up another 36% from those heights, and it's neck and neck with Apple and Microsoft as the world's most valuable company with the market cap in excess of $3 trillion. The stock just keeps going up and up as Nvidia continues to exceed already sky-high expectations. The numbers are staggering. The company is currently expected to earn $67 billion of profits this year, which is up from the $50 billion that analysts were expecting at the start of the year. And things might get even better for the company in 2025. The company's next generation Blackwell AI chips are scheduled to ship later this year, and that could lead to another surge in demand. Analysts are currently penciling in $91 billion of profits for the company next year, but those estimates are likely too low, and Nvidia will probably end up making well over $100 billion when all is said and done. These enormous numbers are a reflection of the fact that Nvidia's customers just can't get enough of its AI chips. Chips which are seen as the most cutting edge when it comes to AI. And of course, there's been a ton of excitement surrounding AI ever since OpenAI released ChatGPT back in November 2022. Nvidia's largest customers, Microsoft, Alphabet, Meta, and others, are all extremely excited about what AI can potentially do for the world and their businesses. So they're all racing to buy up loads of chips from Nvidia so they can use them to incorporate AI features into their existing products and to create completely new AI-powered products as well. I don't think we've seen this much excitement about a technology since the internet boom and eventual bubble of the 1990s. And that's what makes me believe that we could be in the early stages of a bubble today. Think about it. All of the ingredients are in place for an AI bubble to form. You have a world-altering technology that has the potential to revolutionize many parts of our lives. That's created an environment of intense excitement that's causing people to want to invest in this technology. Over time, that excitement might build and eventually turn into a frenzy, drawing in huge sums of money as everyone tries to capitalize on what seems like an unstoppable trend. Now, bubbles share a lot of similarities, but they're all different as well. What I think makes this potential bubble unique is that there's only a handful of winners or perceived winners. Almost all of the money flowing into AI today is related to the build out of the infrastructure that's needed to power AI applications. Specifically, AI data centers, which are made up of high-speed networking equipment, specialized cooling systems, and of course, Nvidia chips. Nvidia is taking the lion's share of the money that is going towards this AI infrastructure build-out, with around half of every dollar spent going to the company. Sure, there are some other winners, like Dell and Supermicro, which are taking Nvidia chips and other components and packaging them together into powerful AI computers. Arista, whose networking gear links those components together, and Vertiv, which is supplying power and thermal management systems for the data centers which house AI computers. There's also Broadcom and Marvell, which are helping customers create custom AI chips, as well as AMD, the second largest maker of GPUs after Nvidia. But Nvidia is far and away the dominant player in this AI ecosystem. The company's AI chip market share is estimated to be upwards of 95%, thanks to its advanced chip designs and accompanying software. Other than Nvidia, the only company making significant sums of money from AI today, meaning more than $5 billion per year, is Broadcom. Even OpenAI, the company that most consumers are familiar with when it comes to AI, is only generating annualized revenues of around $3.4 billion today, though that number is growing very fast. And that makes this situation different than other bubbles like the COVID bubble of 2020 and 2021, where there were a ton of different winners or perceived winners, from electric vehicle makers to software companies to biotech firms. Or the internet bubble of the 1990s, where any company that put .com after their name was bought up by investors. That's why I think this could end up being the biggest bubble of all time. Investors that want exposure to AI have a limited number of choices. So all of the money that wants to chase the bubble has to flow into a small number of companies, and primarily Nvidia. As I mentioned earlier, Nvidia is already one of the biggest companies in the world, but it could reach unimaginable heights if the bubble thesis plays out. Now, don't get me wrong, I'm not saying that Nvidia is in a bubble today. You could certainly make the case that at 35 times next year's estimated earnings, the stock isn't particularly expensive given the company's growth rate and given the likelihood that the company is going to beat the current earnings estimates. But there are some who believe that Nvidia is already in a bubble because its earnings are being fueled by what they believe is AI hype. This is the view that was recently laid out by analysts at Goldman Sachs in a widely read research report in which they argued that the large companies that are buying up loads of Nvidia GPUs to power their AI applications will end up losing money on those investments because AI isn't as revolutionary as they think it is. Another popular bearish view that's been going around is this idea that even if AI is revolutionary and there ends up being many successful AI products in the future, Nvidia won't be able to sustain its super high profit margins. Last quarter, the company kept as profit 57 cents out of every dollar of sales that it made. That's an unusually high profit margin that's well above the company's historical profit margins, as well as the profit margins of other large tech companies. Even if Nvidia remains the leading provider of AI chips in the future, increased competition may lead to lower profit margins over time, which could weigh on the total earnings of the company. So those are two bearish views that suggest that Nvidia could be in a bubble already. Personally, I don't buy the first argument, the idea that AI isn't revolutionary. It seems to me that every time we have a new groundbreaking technology, there are a group of people who dismiss it based on its capabilities at the time. It's the equivalent of downplaying the potential of the internet in its early days because it was too slow or because it was used to browse rudimentary websites or to send basic text emails. For whatever reason, the skeptics don't want to or can't foresee what the technology might become in the future. If you've watched the rapid progress of AI just over the past year and a half, you can see how quickly this technology is progressing and with just a little imagination envision the incredible things that it could enable in the future. Not to mention, AI isn't just about creating new products that generate new revenue streams for the companies that are investing in it. It's also about the cost savings that companies can harvest by making their workers way more productive. So with that said, while I'm not concerned about the revolutionary potential of AI, I am concerned about the margin compression story for Nvidia. It's hard to imagine the company maintaining profit margins of 50% or more indefinitely. And if those margins eventually come down, that could be a headwind for the stock. Anyway, I don't think any of this matters over the short term, at least the next 6 months, maybe even longer. I think there's enough hype surrounding AI and momentum in Nvidia stock that it can continue to rally from here. This is more of a gut feeling type of call. After all, bubbles are driven by human emotions, excitement, hype, and FOMO, and you can't really quantify those things. My sense is that we haven't reached the peak of the euphoria. History suggests that bubbles can grow to be much bigger and last much longer than you would expect. There's also the potential for the rally to broaden out beyond just Nvidia. Though far from the gains in Nvidia, we've been seeing rallies in AMD, Marvell, and other semiconductor companies that are helping build AI infrastructure along with Nvidia. We're also seeing strong returns from Microsoft, Meta, Apple, and other mega-cap tech stocks that are using that infrastructure to create AI-powered products for their customers. And at some point, if the AI hype intensifies further, we might begin to see smaller, more speculative AI-related companies begin to surge. Just like any company with .com in their name soared during the internet bubble, we might see the same happen for any company with AI in their name. We also might begin to see more AI-related startups begin to IPO. Anyway, this is all kind of speculation. There's no guarantee that we're going to see things play out the way I've laid out, or that we're even going to see an AI bubble. From an investment perspective, what I've been doing is overweighting companies that would benefit from an AI bubble, but that are attractive stocks in their own right. Nvidia, of course, but also stocks like Apple, Meta, and Alphabet. If it becomes clear that an AI bubble is forming and valuations become extreme, I'll probably start to take profits on these positions. So I'm riding the AI momentum for now, but but I don't recommend that anyone follow suit. This is an active, relatively high-risk strategy, but it's still in every investor's interest to follow along to see what happens. Today, a handful of stocks dominate the S&P 500. Even if you own an index fund, your returns are going to be highly influenced by movements in these stocks. I made a video several weeks ago about how I don't think that the large weightings of these mega cap stocks is necessarily a risk for the overall stock market. But if we get an AI bubble and valuations for these stocks reach extreme levels, then I might have to reevaluate that view. Anyway, I'll talk more about the valuation for the broader stock market in a future video. That's all for now. I hope you found this video interesting. I'll catch you in the next one.